To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, MicroEssentials with Fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching. But MicroEssentials is very different. Over time, microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only MicroEssentials with Fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.
Network. We just heard Kara Hartz, and I'll give her a little bit of time to get set up here in this other chair. You met Don Wick, Claire Lyseth, our summer intern, right there. Give a wave, and it's a pleasure having her back. She's an NDSU senior this year, right? Do you have Frayne as one of your props?
Not yet. Not yet. We were talking about that.
Yeah.
Not yet.
Okay, that's what I was wondering. Jay Rader, one of our sales guys, back over there as well. So we're glad you're all here. Once we get Kara up here on the chair and then set up, we'll be ready to go. Our guests, I'm going to introduce them right now. Randy Martinson, Martinson Agris Management. Tommy Grisafi with Advanced Trading, and Dr. Frayne Olson, University of, North Dakota State University.
Oh boy.
Get it right. You get it right.
Watch yourself.
Just about did the.
This is live.
There.
This is live. This will be on the blooper reel.
Yep, exactly. At least I don't have to worry about saying one of our broadcasters' names wrong yet, because Sierra Doctor was here earlier this year, or today, and left about 11:30 today. She's getting married on Saturday, so she had to head back out to Medina to get married. I don't know why she wants to do that, but she'll laugh when she sees this. So anyway, we love her. Anyway, so get you all mic'd up, Kara?
1, 2, 3, 1, 2, 3, 1, 2, 3. What'd I miss?
All right, just the intros.
Oh, right on.
I was just trying to buy time till you guys sat down.
Well, thanks. I appreciate it.
So we do have a couple of microphones around here. So if you have questions for our rock star panelists, as Don says, feel free to ask questions. Your questions are always a lot better than what we can think of once in a while. So feel free to ask questions. I'm just going to start off. We had that WASD report earlier this week. Are we still trading it?
The hangover from it, I think, yeah, more so. I mean, you look at the day that the report came out, and the bean number was so much different. I mean, the trade was running one direction, thinking we were going to see an increase in soybean acres, soybean yield, but instead we saw cuts. So then, we shot that 70 cents up. I think since then, we got up to that $15 level. We got close to $7 in corn. I think since then we've been seeing a little bit of hedge selling hit the market, some profit taking, and right now with the exports coming out today, they weren't stellar, but they were good for soybeans and okay for the rest. I think this market now is kind of going into a harvest mode and kind of drift here for a little bit.
I agree. And also that Nov 23 almost hit $14. Maybe it did. And when you look at the soybean market from a risk standpoint, not a hope standpoint, the next $2 could really be down, even though those fundamentals are so. If the next move is down $2, that's what's going to cost producer money. The upside's easy to do, but when you see us here on Tuesday and the Dow was down 1270, those are real numbers. There's real money coming out of the market. Gold's down $35 an ounce right now at 16 something, and we're supposed to be in this massive inflationary period, and you're watching core commodities like gold and copper melt down. And when you ask, like, what's it have to do with North Dakota in this panel today? Well, we're going to need a doctor to tell us. But the traders in New York and the money, when they watch the CRB index, when that thing starts ticking down, they sell all the commodities they're long. They don't always pick favorites. But of course, the fundamentals are wildly bullish. And with that, we're like 30, 40 cents off our high from Tuesday.
What'd you think, Frain?
Yep. Quick comments. I guess I agree with the assessment. So Randy was talking mainly on the fundamental side, supply and demand issues. Tommy pointed out some of the investment community and kind of how they're viewing some of this information. I guess I would concur with both of those. Um, when people ask me what about the report, what was the big takeaway? I guess my sense was I personally I wasn't that surprised to see I was surprised to see soybeans come down as far as they did. I didn't think USDA would take that big a chunk in one time, but I do think we'll start to see a little bit of softening in the yield forecast, mainly because there, as you get into the western corn belt, some of this drier conditions, some of the warmer fall that we've seen right now, I think there's more and more questions about on the corn. What are the test weights going to be? I know up here we got a late planting season, and we're worried about test weights on the other end because of cooler fall and early frost. But when you get into the drought areas, they're concerned about those kernels not filling. On the soybean side, yeah, we may have pods there. They may have pollinated, but will those seeds really fill? Are you going to have some aborts? Are you going to have some smaller BB-sized kernels? And so I do think that there's some concerns showing up on the test weights. We're not looking at a complete wipeout of yields. If you look at what we see, what USDA is currently forecasting the national average yield versus like a trend line. So think about the trend line as in like an average yield adjusted for better farming practices. You- On soybeans, we're right at trend line. We're basically an average yield with today's technology. On corn, we're just a couple bushels off of average. So this isn't a bad crop. It's just we had really high expectations and high hopes for it earlier on in the season. And I think we're kind of coming back to reality on it.
So are you saying if we don't have an excellent crop, it's really not going to hurt us globally?
Um, on soybeans, soybeans is the one that I think is the one to watch. Corn, I know corn is king, and it really does have a dominant psychologically dominant force in the marketplace. But from my perspective, soybeans is really the one that has the most volatility behind it and probably the most shock value, both up and down. What Tommy's talking about as far as a retracement and bringing some money back out of the market can easily happen as well. And that will come from the export market. Right now, the most traders and analysts from a fundamental side have a very large South American crop kind of in their mind. Right now, every forecast that I have seen, every prediction, whether it be a government agency or a private forecaster, is looking at an increase in planted acreage. You take that increase in planted acreage times an average yield, and the Brazilians are going to have a monster crop.
Bring it on, right?
Right. Well, but what that means for us in soybean world up here is our export window. If they do have this big crop, our window to be competitive in the export market's relatively tight. By the time we get into late February, late January, middle of February, a lot of the world, in particular China, is going to switch to that Brazilian crop, and we've lost our window. So we're that time frame because they have drier conditions in the northern part of Brazil in the Mato Grosso region. Expectations are they're going to plant a little bit earlier because they can get in the field. Planting progress is going to be really quick. Early planting, quick planting usually leads to higher yield potential. And so that psychologically that's playing on the market right now. So even though we have really tight stocks, I think we're going to have some decent export sales on soybeans as we move through the next several months. Be watching that South American crop really carefully because the South American beans right now, as you look at the forward bids, those bids for delivery into, let's say, a February, March of next year, the Brazilians have us beat right now.
Randy, you mentioned harvest. The maybe the grain market's starting to shift that way and look at harvest weather and progress and what we've been seeing. What have growers been telling you about harvest up here in the north?
Well, we're starting to see some beans come off already, and we're seeing, especially down in the southern regions of this of North Dakota, where the crop is getting pushed a little bit faster. So it's likely we're going to be seeing soybeans, not a general harvest, but deep in, getting into it here before the end of September and by the middle of October. And I think we could see some corn harvested here by the end of the month as well. So it's going to be interesting to see just where these yields come in, and I think that's one of the things the market's going to wait for is they see where the actual what the combine tells us once it starts to roll. But to kind of take on to what Frain was saying, about South America, Argentina is selling a lot of beans right now, and they're kind of taking they're kind of our competitor right now on the export side of things when they normally wouldn't be. But their farmers have held on to beans for so long because their currency is worth nothing. The beans are worth something, so they're going to save the beans to trade for product. Well, now the government is forcing them to sell their beans, and so we got another competition with in the export side of things that are could pull us back a little bit on our exports.
Tommy, what are your farmers telling you?
They're happy they have a crop like myself and the Red River Farm Network. We went on a crop tour and we're smiling. We're happy they're planting it in the first week of June. And but Don and I were like, I don't know if this is gonna what's this gonna be, and all we could think about was an early frost. But it looks like that's not going to happen. And and I don't know the answer to the question, and these guys probably do, but with our dollar so strong,
Yeah.
doesn't can you I hate to ask you a question, but
Please go ahead.
I had a hard time with high school and you have a doctor in your name. So with the dollar so strong and what Randy said, shouldn't this group be like concerned that things could just change in 3, 6 months? Be like, how'd this happen? South America planted a ton, the dollar got strong. What Randy said about Argentina changing things. We don't typically have a huge bull market with a strong dollar, right?
Typically not, and I do think you were talking about the commodity complex and some of the retracement, the pullout of some of the investment community using the index funds. And part of that is driven by the value of the U.S. dollar. So it at a to explain this as simply as I can, I guess, at a kind of a higher level, at a macro level, yes, the value of the dollar does make a difference. Okay, so our currency relative to others around the globe. Now, when we get into actual trade, the index that you're talking about, and we always quote, is an index, is a bundle of other commodities. When we actually get into trading, if I'm from Philippines or Japan or China or from Europe, we're looking at the exchange rates between the euro and the U.S. dollar, or the yen, Japanese yen, and the U.S. dollar, and that does make a difference at the end of the day, but only on the margin. Okay. And wheat is more sensitive to those exchange rates because there's a bigger pool of people who can sell we compete against than, let's say, corn or soybeans. Okay. And so it does make a difference. But as a buyer, I'm also concerned about quality. I'm also concerned about timing of delivery. How reliable is your product? You're going to get it there when you want it there. If we have a problem, how do we negotiate around that? And so the U.S. is looked to as being a very reliable supplier. Yes, you have to pay a little more for it, but you're also a very reliable supplier. So yes, price is a significant portion, but you buy beans from the U.S., you buy beans from Brazil, buy beans from Argentina, and you're dealing with completely different systems. And so part of this is also the reliability piece. And the U.S. is still looked at. Yes, you're going to pay a little more for it, but it's going to arrive on time.
So I guess you mentioned reliability, and I think about this rail crisis situation that we've averted maybe today,
Mm-hmm.
quote unquote, fingers crossed, whatever you want to do there. Um, whether or not we had this risk, there were a lot of questions about rail reliability, whether or not we had this possible strike or not, whether or not you take that away, I think that still comes into question. So I guess on a global scale, even if we have the challenges with rail domestically, the US is still a very reliable supplier.
Yeah, and so to tell you a little bit backstory, just to kind of tell a story here. This time of year, we also have a lot of international trade groups come through. Part of it for Big Iron, and part of it just because it's a really nice time of year. All the international buyers want to see the crop and harvest and understand what we do. And so we got several trade teams in that I've also been meeting with.
Mhm.
And that's one of the comments that several of the speakers have talked about to these trade international groups is, yeah, we here in the US, we complain about our rail system, about the barge system. We complain about transportation in general. But when you look at our system relative to other parts of the world, whether it be Europe, whether it be Brazil, whether it be Argentina, whether it be Australia, ours is still head and shoulders above others. And that came from professional traders, the ones that actually have to buy and sell grain, not only here in the U.S. but also in these other countries. And they said, "Yeah, you guys complain, and I understand why, because we get kind of picky about that. But relative to what other countries have, this is still really, really good."
I think Tommy touched on a little bit too, but that also economics, the economies of the countries plays a big role, doesn't it?
Sure. It's kind of like I think like you want to be you're going to go through a drive-through, you want to be long Chick-fil-A, short McDonald's, right? I mean, Chick-fil-A's got it down, and I think what Doctor's saying is like we're the Chick-fil-A of drive-throughs of grain. We've never had a boat of corn stuck for 5 months because we were invaded.
Right.
And I'm sorry what's happening, and it's a horrible situation. But the economics of trade needs to keep happening, and it makes me feel good that we're in North Dakota. We do have a rail system. We almost had a disaster.
Yes.
Amtrak's were canceled. I looked at Amtrak this morning out of Fargo to Chicago. It was canceled. I wasn't going to ride it, but I did look. And yeah, it's a weird time. There's nothing shocking us anymore besides his shirt.
Yeah. So I had to brighten it up a little bit here.
Rain, did you have something to
Yeah,
add?
no, I just wanted to add, Tommy, to give you another example of kind of what some other countries are challenged with. So I just want to point to Argentina because they've had some exceptionally dry conditions. They continue to have those dry conditions. They really rely on the Paraná River, which would be like our Mississippi River, as one of their main routes to be able to bring ocean vessels in, get them loaded inland, and then ship them back out again. Well, the water level for that river is so low that they
Mm.
can only load ships and barges to a quarter of their normal capacity, 1/4. So it's taking 4 vessels or 4 barges for every traditional load. And think about the stress that's putting on their system. So again, reliability, if I order it, if I'm an international buyer, I have to think anywhere from 3 to 6 months forward. Am I ordering today for what I need 3 to 6 months from now? So there's a lot of pre-planning goes into this to get the logistics and everything figured out so that the vessel arrives or the train arrives, whatever you're receiving it at the right time, at the right location. Well, if you suddenly get, again, a war or you get these natural disasters or you get some kind of political disruption within your country, that reliability goes to heck. And if you're a buyer, you're a processor, what do you do if you don't have beans? What do you do if you don't have wheat for flour milling? Talk about a stressful job.
I had a friend ask, we've had so many black swans. When do we stop calling them black swan?
Where's the white swan, right?
Talk
Like,
about China has been a major customer. Are we too reliant? Can we be?
So let me kick that off, and then these gentlemen will tell me where I'm wrong. Um, so let's start with soybeans because that's obviously the kind of the dominant one. The challenge we have with soybeans, and it taken me a long time to figure out how to explain this. When we export whole soybeans, we have to export it to a country that has crushing capacity. Okay, well, the world's largest crusher from a volume standpoint is China. And so when we got into the trade war with China, we couldn't sell our soybeans into the Chinese market. And we started looking around saying, well, we'll just sell to somebody else. We had to sell to a country that had the crush capacity. And so if you order in list of order, China's number one, um, the US is number two, Brazil and Argentina are about the same size. And then you drop way down on the list to number five, which is Europe. Well, last time I checked, we're crushing all the beans we can. We're not going to export our beans into Argentina and Brazil to get crushed. So all of a sudden, we went from this huge market to a very tiny one that only had limited capacity. It takes a while to put a new crush plant up. We're figuring that out, right? So on soybeans, we are very dependent, and that's probably the one that's the most dependent on the Chinese relations, U.S.-China political relations. Corn, historically, corn has not been a big China's not been a big buyer, but that was because of our because again a trade problem. It was a legal thing. You guys remember Mir 162, the Syngenta trait, right? So that was released a little early. The Chinese hadn't signed off on it. China says we're not going to buy your corn unless you can guarantee it doesn't have any Mir 162 trait in it. Well, as of the trade war, that rule was still there. So they were not allowed to buy, even if they wanted to, U.S. corn. Well, now with the trade agreement, that was removed. They came in and started buying a lot of corn because at that time they really needed it. I think they will still buy U.S. corn, probably not the quantities that we saw before. Wheat, China's never been a really big wheat buyer. It's been very sporadic, in and out, in and out. There's years they'll come in and buy. There's years they won't. It all depends upon the size of their crop and the quality of their wheat. So in order of kind of the big three, Soybeans, yes, we're exceptionally dependent upon China. Corn, they become a big buyer. We've gotten by without it before. I think there are some other countries you can sell to. In wheat, the world wheat market is very dynamic.
Anything you all have to add to that?
What I miss, guys?
I just hope I get one semester's college credit for sitting. I'm gonna have to get my GED to finish high school.
Yeah,
Then I'm gonna go to college.
no, Tommy, you're doing
Um,
great.
that was wonderful, and I'll sit here all day and I'm learning myself. There's parts are moving so fast that uh, let's hope a trade war doesn't happen with
Yeah.
Taiwan and China and everything else. But if it does, maybe I'm misspeaking. I think they need our soybeans more than we need them. And although it would hurt, we we're building crush plants where if electric's 10 times more expensive in Germany and England, they're not going to be able to raise hogs and turkeys and chickens and everything else. Everything that has a fan hooked to it, natural gas is used for things. So the energy problem that the world has, although America energies have went up in the world in America, not nearly as bad as they've went up in Europe. And I Crane would know people over there a lot more, but they're going to if this energy thing doesn't calm down, which is man-made, we're not running out of energies anywhere. We just became green before we went through all the other colors to get there. And it's just incredible what's happening. And I have a cousin who's in England, and she told her mom, "This is horrible. The England government guaranteed my utility bill won't be higher than 400 a month, but it was $40 last month." And the UK government capped electric bills. But she's a college student getting her law degree, and I don't think she had that penciled in for extra expense. Now, imagine being in an industry that makes glass, or they said the word smelting,
Yep.
and the amount of energy you would use to produce things, which is just going to make the supply chain worse. Why half these vendors out there really don't have anything to sell you. It's really a bad situation. But I think America, as Frayne had said, is set up better than anyone to handle this. So this room is going to be the beneficiary of the world's problems.
Randy, anything to add?
Well, tough to add anything to Tommy's comments there,
Come
but
on.
but kind of piggying on with Frayne there, on the export side, yeah, China's the 800-pound gorilla in the room when it comes to soybeans, and they got to be that way in wheat and corn a few years ago when they had some crop production problems. I mean, they were buying everything, and it didn't matter what it was. Even pork, and they were huge. I mean, our pork exports are down 60% because they've slowed down because they built their hog herd back up again. And we were also seeing a lot of beef go there. So their appetite was huge. Well, then COVID hit, and they went into a zero lockdown or a zero tolerance, which shut down everything. It was to the point I've got some guys I work with out of Hong Kong that said, when they live in a big community that's about 2,500 people, one person gets COVID in that community, they shut it all down. I mean, everybody's locked in your house, apartment, whatever it is, and you don't leave until your quarantine is up. And they bring you the food. They tell you what you're going to eat, and they bring it to you. You don't
Be a
go.
robot.
Yeah. So I mean, they really, and that's where a lot of the demand is slowed down in China. Now, if they start lifting some of those, we'll start to see some of that demand come back again. But that's where I think Brazil is kind of stepping into it too. If they're looking at a 6% increase in their acres, production of 150 million metric tons of soybeans, that's going to take a little bit of our exports away that the U.S. would normally get into that. Now, I don't think they're going to get that crop, but even a 136 is 10 million bigger than this year, and it will displace some of our exports that would normally go there.
It's going to
So
be
for reference, just so 136 was the previous record. So when we look back at historically, what was the largest crop that Brazil of soybeans? What's the largest crop they produced is 136. The current estimates I've seen are like 147 to 150.
And
I
then
mean, it's a substantial increase from where they have been in the past.
And that's primarily on just an increase in acreage, isn't it?
Most of it is an increase in acreage. There's a small, again, most people when they do the math on that, they're using the acreage and then looking at a trend line yield. So again, if they have a better than average yield, it could be even larger. But if it's a below average yield like they had last year, we'll take some off the top end.
while we're talking global here, I'm going to shift countries a bit. Since last Big Iron, we've had some major things happen, including the Russia Ukraine situation. What's your take on what's happened with grain in Russia and Ukraine, and does it have much weight in markets moving forward? I guess it's a two questioner. Sorry about that, guys. Maybe we start with Randy Martinson on the end and work our way down.
Sure.
Well, Russia's right now is expected to produce a record wheat crop in the country, which I find hard to believe. I think some of that wheat is Ukraine's wheat that they're just taking and for themselves and shipping it.
Mm-hmm.
But Ukraine right now should be planting wheat. They're looking at a 30% reduction in acres just because of not being able to get the money to put the crop in, the input costs being expensive, and not knowing if they're going to harvest the crop next year because they don't know who's going to be controlling the country. So I think wheat's got a bigger story going into next year because of the potential of losing more out of Ukraine. Russia is struggling to export a little bit of their wheat right now because of the sanctions, and I think that's going to be kind of a long-lasting effect with them as well. So it's going to be interesting going forward how this all plays out. It seems like Russia is kind of losing their interest in the war, but we'll see.
Well, only thing I can say is someone who's a broker and a professional trader. If I want to get a good night's sleep, I get 100% flat and shut my phone off. If I go to bed with positions, I set my alarm for 1 a.m., 2, 3, 4, and then I wake up. And I've really never slept much because the amount of risk in the way news comes out of Europe when it's 1 and about 2, 3 in the morning, Europe's opening up. I mean, there was a time when the war started that the second the markets would close, I would go to bed to wake up again. I mean, there's that much risk. So as a trader, I can get flat and say I'm going to bed. You all, as farmers, you can't get flat. One, because you'll probably never get forward sold enough because you're in North Dakota. I understand all the excuses. And some are very legit, like planting a whole crop between June 5th and June 10th, worrying about an early frost. So from a trader's perspective, the risk is too great to have large positions on unless you're going to babysit them. From a farmer's point, I don't know how you are sleeping because of a couple more of these so-called black swans happen, then your risk, I think this room doesn't realize how great their risk is. And all they're going to remember is how bullish the fundamentals were from Monday. But we've seen this before. If you go back to the great ethanol debacle, when people were buying one call and selling two puts, and they were selling the $5 put because corn was 6.50, and the ethanol companies were all sure corn was never going to go below 5, and it was 3.50 a few months later, and about how much the ethanol industry went broke. 1/3. I was in the Chicago Board of Trade corn options pit when these orders were coming in to buy 10,000 at the market of the puts that they blew up on. So when things go bad, and they seem to have been doing that a lot the last 3 years, or one person could have the right trade, one person could have the bad trade, but a lot of the black swan events really are stemming from one thing, and it was the day crude oil went to negative 47. And when crude oil went to negative 47,
Hmm.
every actuary science person, the smart people, had to change their numbers. Is that true, doctor?
Yes. Yes.
Why is that?
Why?
I'm,
Why
s-
that?
I'm serious.
No,
Yeah.
because you had a negative price. I
And
mean, in not only in theory but in practice, we don't see negative
so we
price.
had to change what risk is. And on that day, risk changed forever, in my opinion.
Mhm.
Well, actually, I know it did because
Yeah.
I bought crude at negative 30. And I sold it at negative 25, and I got yelled at from the clearing firm. They're like, "You're done. What are you doing?" I got, "I don't know, it's just kind of moving really fast." So, but from you guys' perspective, there's some risk, right?
Frain, anything to add?
Yeah, so a couple things, I guess, to tie the comments together a little bit. I agree with Tommy.
Say that one more
I
time.
agree with Tommy on a couple things. I want to
But
qualify.
you're
I
like
want to
my wife.
qualify. Yeah,
But
but
I don't mind you going out. But
no. So the geopolitical arena is one of those areas that, again, it's bad enough trying to forecast yields and weather and all the other stuff going on. If you guys figure out how to forecast politics, let me know because I don't know how to do it. But coming specifically Ukraine, Russia. So we can look backwards and say what the impacts have been. Probably the strongest impact has been obviously on wheat, just because both Ukraine and Russia are major wheat exporters, primarily what we would classify as a hard red winter wheat, not so much the spring wheats. But it's also had an impact on corn because Argentina was growing and continues to grow as a corn exporter. And that is where I think there's been a fundamental shift. I don't know. In my opinion, it'll take quite a while for Ukraine, even if the war were to stop today, to get back into the corn business and rebuild where they need to be. Part of its infrastructure, there's a lot of the things. There's a meeting yesterday and today between Vladimir Putin and President Xi of China. And when I look forward in my crystal ball, that is one of those partnerships that kind of puts a pit in my stomach. Um, because Russia is natural resource rich, China is natural resource poor. Russia is got a flat population growth at best. China, even though the growth rate has slowed, is still growing very rapidly. That kind of partnership from an economic standpoint, politically, I don't know if they can hold it together, but from an economic standpoint, that partnership would be a strong partnership.
Powerhouse.
It would be a powerhouse if they can get the products to flow well, the logistical system. There's some really big challenges. I'm not saying that's going to happen anytime soon, but they're moving in that direction. I do now. Ukraine can grow some soybeans. Southern Russia has the potential to grow some soybeans right along the Black Sea region. But their area is, even though it's exceptionally productive, kind of like the Red River Valley land we have, it's very productive land. It's not a huge area for that's suitable for, in particular, soybeans. Now that might grow and expand based on changes we have in, in genetics and our ability to grow stuff. But I still think China is going to be reliant on the United States and Brazil in particular for their soybean supplies, at least over the next several years. The wheat supplies and potentially the corn supplies are where we might looking at China looking at other alternatives like a Russian supply situation. Now, I agree also right now, short term, one of the reasons that Russia's having major concerns or major issues with shipments is freight rates. The freight rate for ocean vessels going into Russian ports, they got to go into the Black Sea, are exceptionally high. I've got a little chart that I use in some of my presentations, and the freight rate um, from China, I mean from the Black Sea to like a North Asia, like a Japan or a China delivery point, has increased. I think it was 35% in the last couple of weeks, and it's well over what it would cost to ship the same product from the Gulf of Mexico into that same destination. So their part of their problem is getting the ships in, getting them back out again. This Russia having, not necessarily Ukraine, and then the cost, just the risk of putting a vessel into the Black Sea, having it not having it disappear or sink is pretty high.
I think many too in the grain industry was expecting once the Ukraine Russia war broke out that a lot of that wheat business would come to the U.S. But we did not
It
see that.
it didn't, and I'll try and take that because it's a question I get fairly often, and you guys please again correct me
I,
when I'm wrong.
I don't even want to take that.
Well, okay, so number one, the Black Sea, the Russians and Ukrainians, they sell what we would classify or grade as a hard red winter wheat. The countries they sell to are very price sensitive countries, and they tend to be some of their neighbors. So we're looking at North Africa, Egypt, Middle East, a little bit into like India, Pakistan, not much. Those markets we typically don't ship into. Our big wheat buyers in the United States are our number one is Mexico, the Philippines, Japan. We have sent quite a bit over the last couple of years into China. So it's our major right now, major markets are those buyers that are more quality sensitive. They're looking for quality, they're looking for consistency. If you're a price only buyer like in Egypt or like an Afghanistan or Iran, Iraq, it's a next door neighbor, shipping costs are really low. Those are the countries that are having the big problems right now. They really don't have the capacity to be able to buy and pay for US wheat. Again, part of it's delivery cost and part of it's just it's a higher value crop.
I guess shifting back here to Northern Plains, U.S. production, anything to note on basis, anything we should be watching here as farmers get ready to market their crop here at harvest?
Well, I think one thing is if we can avoid this rail shutdown and the strike, that's going to help quite a bit. But we're kind of running a little bit tight on supply right now, so there's some decent bases that are being offered. Early harvesting crop, if there is some out there, we'll get some decent bases. But I would expect, by the time we get into about a third into our harvest, we'll start to see that basis widen out. I would expect that by the time we get towards the end and most of the grain starts going into the bin, basis levels will start to improve again. But we're going to go through a time frame where it'll widen out and it'll be kind of ugly. The nice thing is we're switching now more out of a export market locally into a production with the crush plants that are going to be coming online, and that's going to help going forward quite a bit.
What kind of a increase in basis could we see from those crush plants? Anyone on the panel can answer that one. Do
Well,
we know? Frame?
I've got an opinion, but I want to hear these guys first.
Well, I think mine's like yours, Frayne.
I didn't hear the question.
Oh, I'm sorry. I said, do you know what kind of an increase in basis could happen because of the crush plants for
I,
soybeans?
I would just say a good one. I
Yeah.
don't know if I'd get, it's going to help. But the thing that I've noticed up here is that we didn't get a lot of corn planted. That's a fact. We've had several production issues the last few years. There's 3, 4 people out there that'll sell you as big of a bin as you can write a check for. The end user, in the old days, we'd come do this meeting, we'd be on the panel. I think I've been up here 7, 8 years, and it would be, oh, you don't understand. We're in North Dakota. This is the sewer basis. I will go on record and say that is not going to be that way anymore for 2 reasons. That one, because the Ukraine that we're producing, if you go for a ride, you see an incredible amount of sunflowers. You see an incredible amount of canola. You're seeing ABC, anything but corn, and well, you're seeing a lot of beans too. But when you take what we're going to be able to do in North Dakota with domestic use and abilities and the staying power the American farmer now has for uh, they had 2 years of being able to buy input somewhat affordable. Someone in the crowd's going to get up and yell at me and say, I paid this for fertilizer. What they're not going to tell you is they could have bought it 6 months a year before. They just didn't. So, in my opinion, we're at 2 years of low inputs, high prices, a massive amount of government money. If you don't believe me, take your name and then hit PP Loan 1, PP Loan 2, then go on the EWG and look at yourself. And then I could see the money. And there's some other money coming in too. And the American farmer has incredible staying power. Hence why we're seeing record land prices here trade in North Dakota. So from when I came up here to now, this is a different place. It's a better place, but we need to sometimes we need to respect the opportunity that was given here to North Dakota.
Okay, here we go. So, I want to take people back. Some of you will remember this. Do you guys remember when the Tharaldson ethanol plant was first built?
Mhm.
Remember some of the conversations and discussions like, oh my God, how are we going to grow enough corn to supply that size plant? We're never going to have that much corn in North Dakota.
If you build it, though,
Well, and again, the markets responded, you guys responded. So if you think back to that transition that we saw in basis levels, when the plant first opened and first started, we had a substantial jump in basis if you were able to deliver that plant. If you could bring it in either by truck or rail and bring it in and deliver, you got a substantial bump in basis. But once the growing area started to grow, we grew more bushels. There's still a premium delivering to the plant over delivering to an elevator, but it's relatively small. So over the next couple years, when the plant at Spiritwood comes online, I do think you will have pretty substantial basis improvement. Numbers in my mind, probably 40, 45 cents for a while, but it won't stay that way forever. My guess, if my anticipation is by the time we get the acres to be able to feed the plant, you'll still see probably a 20 or 25% cent basis better to deliver to the plant versus deliver to the elevator, but it's not going to be as large as what I think some people think. So I do think we're going to see a transition. When it opens, we'll see some really impressive basis levels trying to get that product to flow. But once we get the production around the plant and once we figure out this transportation systems, it's going to come down and stabilize. And I do think that stabilized value would be between, again, 20 or 25 cent premium per bushel over, again, delivered to plant versus delivered to elevator.
Do you see the livestock market increasing then around those plants, or do you see that staying stable?
That's a trickier question. And a lot of people are asking, so if we increase crush capacity and we're crushing it because of the oil, because of renewable diesel or biodiesel, and all these, again, all these new markets that are developing, similar to what we saw in the ethanol industry in the early 2000s, the meal is going to be again the question. Everybody says, well, we got a home for the oil, it'll go to these plants, we get a refinery going. What happens to the meal and where we're going to get rid of it? Some of it will stay local. There's going to be an incentive to try and provide more domestic or local feeding. Not only do we have DDGs, now we get the soybean meal, we've got some whole corn, we've got a lot of other co-products that we can use as feed and feed additives, right? But it depends upon the species. And it's going to be a lot harder to kind of figure out in my mind, so what species or what livestock makes the most sense around those areas. As far as where are we going to get rid of the meal, and again, this is a transitional thing in my mind. South Asia, when you look at countries like Indonesia, Malaysia, Thailand, Vietnam, Cambodia, even to some degree in the Philippines, there's a big demand for meal. Okay, they don't necessarily need whole soybeans, but there is a big demand for meal because of their livestock sector. We right now in the US don't have a really strong, deep, diverse um, ability to be able to supply that region. We've got a few plants, one export terminal in the PNW that's really set up very well and to handle soybean meal, but pretty much everybody else is set up for whole grain. And you do have to handle meal a little bit differently. So it'll take some capital investment. It'll take a little bit of time. I think the incentives will be there, but I do think that supply chain for meal is going to head to the west, in particular that South Asia region. So, in my opinion, there's a demand base for it. Is can we get the infrastructure built to be able to handle it?
So we talk a lot about, getting ready for harvest, and I think about marketing a crop here. Have we put in harvest lows yet when you look at the markets, the grain markets?
I sold some corn on a Friday at like 568. I promise you it won't go back there right away. And that was the day I sold that corn. I told it on your Tuesday panel. I wanted to go home flat so I could sleep that weekend. And I grains close at 115 and they really close at 120. And I still was long 10 corn and I sold the dead low. And I do this for a living. So I would, and the thing that's funny is we had the most bearish news, but then that was the day there a ship left Ukraine. It's really happening. But what was interesting from it happening is all that grain got gobbled up, all that grain left. And to Frank's point, they ain't pushing ships back in there. They got them out. They're not going back in.
Right.
And this tug of war and pull, even if the financial markets collapse, which I don't quite
I
think
don't.
they'll do, but there's so much demand when prices go lower. And the prices we traded in, I think that was July. I don't think we'll see those anytime soon. That was like, I don't remember how low beans went, maybe below 13, had a 12 in front of them. We had a couple really ugly weeks there. And from a future standpoint, that's probably the low. Now, to Randy's point, we could see some basis lows, as he said, that 1/3. Maybe not. I think people are going to be incredibly surprised how confident in the ability of the upper northern plains farmer to store grain.
Anything to add?
Randy?
I guess I don't think we've hit the harvest lows yet. I still look for some more pressure to come into the market. I think we've got a bottom, that we won't see a big sell off because our stocks are tight enough where we will have to come in and try to buy acres next year. Winter wheat is buying acres right now. I mean, with
Yeah.
the base price for crop insurance being set at the close of yesterday, 30% higher than last year, we're looking at more winter wheat acres again that will be planted because of that. And what's their risk? And the government's also encouraging them to plant wheat and then going and double crop with sorghum or soybeans. So we will see a bigger wheat crop again, or at least the acre side of things. They're dry. Who knows what's going to happen going forward? But I do think we do have a little bit more of a drift. I was looking at charts this morning, and we probably have 30 cents down maybe in corn to get to some support lines, maybe a dollar in beans. But then I would say that our stocks will stop it there because they're tight, and we can't get. If we get the price too cheap, then we're going to get demand up too much, and then we go back into that roller coaster again.
How much does an 8.3% inflation rate impact that?
I think it's a knee-jerk reaction in the grains because our problem is still there, and that is our stocks are still tight, and we still need to build stock. So, and how that gets changed is the dollar goes up and we export less, but we already know we're exporting less. Corn demand, took a pretty good hit. I mean, and soybean, we saw exports drop in both of them in the
I think we
report.
had
I'm like,
4 weeks worth of data come out today. That was
We
impressive.
we did. And beans were a little bit above what they expected, but then wheat continues to be, I lackluster at best. We can't seem to get our export for wheat going market, and that's going to be tough to do even going forward. So
Fran, anything to add on marketing at all, or
Yeah, no, I guess I basically I agree with both your comments. I think I don't see. I think we can see some softening coming into harvest. We typically see that, but Tommy's right. I mean, you get too much of a drop in any of these commodities, and all of a sudden the buying interest is there because there's some pent up demand. All the buyers are kind of looking for those bottoms to try and buy. Really don't see a lot of big downside risk unless there's some political uncertainty or something comes up that we don't see, another black swan, right? But if we stay in kind of a stable environment, just look at the supply and demand things. I do think we'll see a little bit drift lower, but it's going to be limited. Um, wheat, I think. So I'll be very specific. I think there'd be more volatility again, as I said, in particular in soybeans, some in corn. The wheat, spring wheat again. We've been within this trading range since July, and I don't really see anything in the next month or so that would change that. But I think we're going to be stuck in that trading range, into and through kind of the corn and soybean harvest. After we get the bins full and the combines put away, then I think we're going to have to do a reset and figure out where we're at with wheat.
I wonder what questions do our audience have? We've got one. Hold on, we'll get you a microphone right here in the
Here,
front.
back there. Yep.
We have time for about 2 or 3 questions here. So if you've got a question, raise your hand and we'll get you a microphone.
I just want to know if you could speak to inputs for 2023 fertilizer, chemical, stuff like that.
Good question.
Uh, I had the opportunity to be on a small panel in what was the farm show we went to, Kara? Farm Progress Show in
Yeah, yeah.
Iowa. And I was on with a man who owns a fertilizer company, and I think he's good at it. And the comment he said to me, this was his comment, not Tom Grisafi's. I've been in the fertilizer business for 30 years. I used to maybe change the price once a month. I change the price now twice a day. He said, get in possession of fertilizer. He said, it's not enough to just buy it. He said, get in possession. Now that scared me when he said it, and it's not always that simple, but if he's in the fertilizer business and he's this concerned, um, what's that outlook? I have clients call all the time and ask me, what should I do with fertilizer? And I say, I don't have the futures and options to key off, can't lay off the risk. So if I told you to buy fertilizer and we collapsed, I, yeah, I get to say sorry. It could cost you $250,000, $500,000. Is there a way to hedge fertilizer besides
no,
buying natural gas?
No,
And at 9,000, you want to buy natural gas when it was
yeah, no.
2,500 a
no,
year ago?
Tommy, you're right. No, there's no direct way to be able to hedge it. We do have a futures market.
We had like a DAP contract or
Yeah,
something.
there's an ammonia
Yeah,
contract, a urea contract, a
trades like
DAP
3
contract.
contracts a
Yeah,
day.
and they're so thinly traded. I know some of the because I do a lot of work with some of the fertilizer guys, the farmer co-ops in the region, and they too struggle with this. You have a futures market, but it's very thinly traded. There's an OTC or over the counter market that you can use,
Mhm.
but again, very thinly traded. For it works for really big price movements, but for
Not
kind of
for
shorter term protection, it doesn't work very well. So it is effective if you're worried about big increases or big decreases. But as you said, if you're a commercial buyer, I mean, if you're a professional trader of fertilizer, you're looking at those smaller moves because that's where your money is at, right? I guess I haven't had a lot of conversations recently with some of the fertilizer folks. It's not an area that I specialize in a lot other than I read some reports over the last couple of days that there is some real concern, especially for those real large fertilizer producers in Europe. And so I am really personally concerned that probably won't impact prices for fertilizer this fall so much, but I think by the time we get to next spring, I'm a bit concerned that the things might take off and go crazy again. We'll have to wait to see what happens, and it comes back to the energy piece. What happens in Europe this winter? There's going to have to be rationing. They're already talking about rationing electricity. doing brownouts. They're already talking about rationing natural gas, putting a priority on consumers, not necessarily industry. There's some really big companies as well as manufacturing facilities in Europe that rely on the natural gas coming or relied on the natural gas coming from Russia as their feedstock. And they're already really worried they're going to have to shut down at least temporarily. So now we may not buy a lot of fertilizer directly from those European buyers, but the fact that they can't sell to others like India, like Brazil, like Ukraine, like China is going to have an impact on our prices. And so personally, I I I would be trying to book what I could in the next several months, not only for fall, but also for looking into spring. I don't have any specific price targets or anything in mind. I'm just conveying some of my concerns. And from a risk management standpoint, right now I'd rather be long fertilizer.
Thank you for
That was
asking
a
that
really good
question.
question.
Yeah.
Really great
We're
question.
nearing kind of the end of our time, and I wondered,
Oh,
do
one
we have
question over
another
here.
question? Awesome.
Which is a stronger pull? The fundamentals for wheat, soybeans, and corn, or the economy tanking due to the recession possibly coming on? In your personal opinions, which has that stronger pull to take us down or the fundamentals to take us up?
I- I'll answer it if you don't mind.
Go ahead.
You can't feed a hog in China Bitcoin. That's it. That's my answer. Gold's down $36. Those hogs in China do not know gold's down $36 today. Grains have a story. It's a physical item. United States does not have a strategic corn reserve, bean reserve, wheat reserve like we used to. In 1988, in the drought of 88, I think we had 4 billion carryout.
Yep.
Frank's the only one old enough to remember.
Oh.
But the,
Thanks, Tommy.
I'm
He's right, though. Unfortunately, he's right. I do remember that.
that's my answer. Grains have a story that's so big that I don't want to. You probably think I'm bearish, but I'm scared to tell you how bullish I am if things keep getting goofy. So we will have swoops down, but again, that'll create the hogs need food, chickens need food, the world needs food. You're in the right spot with tremendous risk. Good luck.
So I'll follow up and then
Go ahead.
you're just sitting back enjoying the day here. I tell you, you got the easy job this
Yep.
time, man. All right. So my opinion, for what it's worth, I am in the grain short over the next probably 12 months. Supply and demand is going to dominate. Supply demand for the grains is going to dominate. The general economy is going to be important. It'll be important to watch. It's something that we can't separate from because we are part of the U.S. economy. We're part of the global economy. But if I were to say, which is more important, which is going to override or dominate, it's going to be the supply demand piece. Because so coming back to, I just want to comment on consumer on the like inflation rates.
Yeah.
So I want you to really think about this carefully. So inflation, the way we measure inflation, typically is through the one that you see in the paper all the time is called the consumer price index. There's one that's called the producer price index, where you look at ingredients if you're a manufacturer, like you as a farmer, steel, wages, all that kind of stuff. But the consumer price index, that's the one that gets reported in the headlines. That's a basket, a bundle of consumer goods. And that bundle doesn't change. The products in that bundle usually don't change much. And it was saying, well, what does the bundle cost this month versus the same bundle cost 6 months ago? And that difference is the inflation rate. Okay, but that's consumer products. What happens at the commodity level, at your level, if wheat were to go up $1 a bushel, the price of bread isn't going to change in the consumer. The fact that wheat has come from $14 down to what is it, 8.5, 8.75?
Bread didn't go.
Bread didn't go down.
Great point.
So the linkage from what happens to you as a farmer versus what happens with general inflation and the performance of the economy, yeah, we're linked. We're part of the economy, but there's a lot of steps in between there that act as a shock absorber. So we don't always feel the impact as quickly or as much as others would in our country. Does that make sense? I just want you to think about what are we measuring and what does it mean to you?
Randy, you have anything you want to add?
No, I'm in the camp with these guys.
Why start now?
No, I think that fundamentals rule. I mean, in the end, it all comes back to supply and demand production. And that's, in the end, that's what the market's based on. That's what value is based on. So the rest is fodder in between that gives us stuff to talk about or the inefficiencies of the day. But in the long term, it's the supply and demand.
15 seconds. I don't want you to get caught long two crops. So if you produced a 22 crop and you're going to farm in 23, I don't want you to be long the both of those. So I don't care if you get pretty aggressively hedged in uh 23, which I would go more beans than corn because the fertilizer play.
Yep.
I don't care if you get heavily hedged soybeans and sold in 23 and keep more corn open. And I do not want you to get caught long, to this gentleman's point, two crops, because if we do have a financial crisis, we can go from the best of times to the worst of times.
Very fast.
If you don't believe me, go ask a housing builder. They may not realize it now, and not in South Fargo, which is exploding, but like the real world housing market's collapsing. And this could happen in the economy, but the fundamentals of grains are still strong. Don't get caught long two crop years. That's my only advice for everyone in here and people watching online.
Thank you all so much. Can we have a
Thank
round
you.
of applause for our panelists today?
All right.
Fantastic. Thank you all for coming today to the Big Iron Farm Show. We are not done for the day. We've got one more session, a fantastic session. We hope that you stick around for. Freedom Financial has an excellent presentation. And stick around. You may have, if you have more questions,